We are back again with Chip Hanlon. He's the president of Delta Global Advisors. Thanks for joining us, Chip.
Good to be here, Jim.
Now, I noticed today you had a big press release on a global shipping index. Can you tell us about that?
Yeah, but I want to talk shipping in a different way. I mean, you're not running a very tight ship around here at Green Faucet. Shirt sleeves rolled up, no coat. You can't even put a jacket on the back of the door when I roll in. Come on.
I could, but today was casual day. It was a casual Friday.
It's casualdayeveryday.com. Okay, that's fine. Go ahead.
Now back to business. The shipping index, what exactly is that? What does it entail?
Right. We issued a press release today that our firm has created the Delta Global Shipping Index, and it's meant to be, what it is a universe of 30 companies, leading companies involved in the shipment of either tanker ships, dry bulk goods, or container ships. Right? This is an area of the market that has exploded with more new listings over the last 3 or 4 years in particular. It's a very interesting area of the market for investors because these companies tend to carry very high yields. The index will currently exist with a yield in the range of 8%. High yielding group that gives people a really enhanced exposure to global growth. So 30 leading companies, global exposure to global trade in a group that is very desirable to investors based on our experience.
All right, now, so you've established the index. Does that mean an ETF to come here?
Of course, you hear index, and the logical question is ETF. What I can say on that is we have licensed this index to Claymore Securities for the creation of an ETF, but I suspect you'll be hearing more from that from Claymore in coming days.
Okay, so now, for those who don't know, can you give us an overview of the shipping sector?
Sure. Okay, so the fundamentals of the shipping sector is, it's almost too simplistic to say they're like floating REITs, but what I mean by that is you have companies that they are ship owners, and once they have purchased and financed their ships, they know the daily cost to insure them, maintain them, run them, and down to a daily basis. They literally express their costs on a daily basis. So what they're trying to do is simply charter or rent out their shipping capacity to those that have goods to move for some rate that's above their daily costs, right? And for a few years now, we've been living in a very favorable environment where shipping rates have been very strong, and these companies have been in very, very healthy cash flow positions where they're taking in much, much more on a daily basis than their costs. They don't have a big ongoing need for the capital, and so they're able to then pay it out to shareholders. And that's really, there's not a mandate that they have to pay out yields like REITs or other types of investments, but they simply have this excess cash flow on their hands that they have little else to do with other than at the moment pay it out to shareholders, which results in this big yield.
Great. Now, today, with all the volatility in world markets and shipping today, what are your thoughts on shipping today?
Yeah, it's a good question. In general, investors should consider, should derive their viewpoint on shippers based on their viewpoint or their outlook for global growth. Okay. It's going to provide sort of an enhanced exposure there. In a wrong way economic environment, these stocks can really get beaten up. In a right way economic environment where the outlook is good and shipping capacity gets a little tighter because more goods are moving around the world, shipping rates increase, and these companies can really provide big total returns. But it's a volatile group. It's not for widows and orphans, despite the big yields. And today, I would suggest that we may be setting up for buying opportunities similar to what we saw in January. These stocks have gotten clobbered in the last 60, 90 days on fears of a global economic slowdown. I think maybe the fear has gone a little bit overboard. These shipping rates have come down, but they're not, they've come down from amazing record levels to levels that still would have been record shipping rates just a year plus ago. So the companies remain in very, very solid fundamental positions, and if the global economy isn't just flat out going off a cliff, then these companies might really be worth looking at for a buy at the moment. But again, investors should base that on their own outlook for global economic growth.
Fair enough. Well, thank you for joining us, Chip. I appreciate it.
Thanks for having us, Jim. Exciting day for Delta Global with the launch of this Global Shipping Index. It is.
Great. Congratulations.